The typical small business, whether it's a sole proprietorship, partnership or limited liability company, doesn't pay taxes itself, but its owners do as individuals. And already about 86% of these so-called pass-through businesses pay no more than 25% under the individual code, the new top rate proposed for small business income in the tax bill announced last week. So they wouldn't get the legislation's much-hyped small business tax cut. On top of that, the bill would make it very difficult for lawyers, engineers, doctors, consultants and other personal services providers, who make up a good share of small businesses, to qualify for the 25% rate. The whole thing doesn't work for most small businesses, said Jack Mozloom, spokesman for the National Federation of Independent Business, which said it does not support the bill at this point. "We think there ought to be a substantial benefit for everybody," he said. The centerpiece of the Republican bill is business tax cuts to spur economic growth and job creation. The tax rate for corporations would be cut to 20% from 35%, and they would no longer be taxed on most foreign earnings. But specifically cutting taxes for pass-through businesses, which would also include S-corporations, a structure often used by mid-size businesses that might sell shares of stock, is more difficult. Their net income is subject to the individual tax code, which has a top rate of 39.6%. So House Republicans proposed a new way to encourage investment by small businesses through a formula that seeks to tax revenue applied to capital expenditures at 25%. However, ordinary wage income paid by small businesses would not get the preferential rate and would continue to be subject to the individual tax code. "We drive almost $500 billion of tax relief for our Main Street job creators," said Representative Kevin Brady, our Texas chairman of the tax-writing House Ways and Means Committee.